I have privilege of welcoming Shri Mihir Gandhi, partner leader payment transformation PwC India and banker colleagues. Friends, as you all know, uh, in our IBA, various committees are formed, and one of the committees is Standing Committee on Payment Systems and Banking Technology. This is chaired by Shri LB Prabhakar, MD and CEO of Canara Bank. This committee had earlier suggested us to arrange for a webinar on payment systems and the future and the vision. Meanwhile, there is a payment vision document also published by Reserve Bank of India. I hope you all would have seen that. So this document has further encouraged us to look into these issues once again. Earlier also, we have arranged some webinars for the benefit of our members, which have been appreciated by all the members of the banks, being of much interest to everybody. So given this scenario, when even our regulator is encouraging us to work on these subjects, I think it is the right time to hear about the possibilities and vision of those people who are actively involved into these activities. So Shri Mihir Gandhi is one of those personalities we were trying to get in our webinar. Shri Mihir is a partner in the consulting practice of PwC India and leads the payment transformation practice. With over 18 years of consulting experience, he has developed a strong business and technology consulting exposure in India and few international markets like Middle East, Africa, and South Asia. He is passionate about helping clients in the financial services, government, and other industries build and grow payments businesses. In India, he has been part of the digital payments growth story in India. He has managed the core team to set up the domestic card scheme of India, RuPay, from 2011 to 2013. Additionally, he has been at the forefront of setting up country legal payment infrastructure for 4 to 5 countries. He works with fintechs and payment companies to develop the strategic roadmap, assist in regulatory compliance, deal advisory, and provide technology advice. He is also part of the PwC's Global Payment Leadership Council, who regularly discuss matters of interest across the world in digital payment industry. So before I request Shri Mihir Gandhi to take over, I think we will have some time for Q&A or some questions which we would have collected. Otherwise, also all the participants are requested to forward their questions if they have. We can form a repository and come back with possible answers on that. With this, I'll request Shri Mihir Gandhi to take over. Chart they can times. Yeah. So, Mr. Mihir Gandhi, over to you. You can start. Thank you very much.
Thank you, sir, for the warm welcome and introduction. It's been an honor for me to be here and be part of this important discussion on the future of digital payments in India. As you rightly said, I think there has been a lot of developments in this digital payment space in the last so many years, and more importantly in the recent times post-COVID. And we have seen how the regulator and how all the industry participants have come together to actually provide a strong impetus to the digital payments growth by providing us a convenient and safe experience for the user to use their mobile or online for digital payments. In the COVID post-pandemic, what we have seen is that the usage of digital payments has picked up even more. I think the endeavor of all the participants post the pandemic was that even though I have used digital payments in the pandemic, how do I make it a recurring kind of behavioral pattern so that the customer or the citizen doesn't go back to using cash and continues to use digital payments, be it a mobile wallet or a QR code or whatever, at a physical location as well as online. So I think that has been the endeavor of a lot of fintechs, banks, like the participants that we have today. And I think this is going to be the focus area of India as a country going forward, of how do we make more and more citizens use digital payments, make it safe for them, and also increase the opportunity and touch points where I can enable the digital payments at different locations going forward. As you rightly said, the regulator is very, very proactive. They keep on coming out with new and new directives and guidelines. And one such direction that we all eagerly look forward to is the payments vision. The latest Payments Vision 2025 was released in June, and it talks about, I think, 2 or 3 things. And if I can just request the presentation to be put up, then I can start going in the details of that. From 2 or 3 things which was covered in the payments vision document, I think the first thing very clearly states about the key accomplishments that we have achieved as a country, and RBI's vision, which was set out 2 to 3 years back. Where are we today on that, and how we have performed. So it clearly states that we have achieved a lot in the last 2 to 3 years. In addition to the things articulated in the earlier payments vision document, there have been more incremental things that we as a country have done, led by the regulator, led by all the participants, which has further led to the accelerated usage of payments in India in the last 2 to 3 years. It also talks about the future in terms of what we want to achieve as a payments vision 2025, and also articulates the goalposts that RBI expects the industry and the banks to achieve by promoting the usage of digital payments in the next 4 to 5 years. So I think this is the broad kind of background, and with that we can get into details. If you go to the next slide, please. Yeah. So if you just go to the next slide, I think the setting the context is largely done. So in this current vision of payments, what the RBI clearly states is that they want to provide every user with a safe, secure, fast, convenient, accessible and affordable e-payment options. So each of these words are very, very important, because the way the initiatives have been put together in this vision document broadly falls into each of these buckets. So the payment system has to be safe, it has to be secure, it has to be fast, so it cannot take a lot of time, it has to be near real time or real time. It has to be convenient, so as a user I can use any form of payment form factor, be it a card, be it a mobile wallet, be it online, and so on and so forth. And if you can please go back to the next slide. And it also has to be accessible, means I can use it anywhere, sitting in my home or going to a nearby kirana shop, or doing it on my phone. And also it has to be affordable. So this affordable also is very important, because we've seen a lot of thrust in the last 3 to 4 years happening because of zero or near zero kind of charges for some of the payment instruments. So there are 5 key anchor goalposts which the RBI has articulated in driving the payment systems going forward. First is integrity, second is inclusion, third is innovation, what new things can be done. Fourth is institutionalization, means how systems can be made similar or institutionalized for a lot of the operators as well as the entities. And the last one is how can we take our payment systems globally, and how we can get global payment systems to integrate with our systems. Because what is happening is that, as has been rightly said, India is one of the largest inward remittance country, where we get almost $70 billion plus of funds every year. So how do we get that in a digital payment mode rather than the traditional SWIFT or traditional mode of getting it inward? Plus, when citizens travel outward, can a domestic card scheme of RuPay or any other product that we have developed in India be accepted in those areas and locations where the citizen is traveling? So internationalization is also very important. And from a focus area perspective, what we've seen is cross-border payments is one of the key focus areas going forward. Domestic payments and transaction processing. So how does the transaction processing will happen? What is the goals, for that? Payment policies and guidelines, bringing other entities like non-banks, big techs, fintechs, and other players within the regulatory ambit. Some of this is already being done, but a lot needs to be done on this side. And the last bucket is on the fraud mitigation. So I will largely be talking on the 5 areas on the right, and trying to explain few of the initiatives that the vision document clearly states across these 5 areas, and we can further then detail down and ask more questions on that. So the theme is that there should be e-payment should be for everyone, everywhere, and every time. So it's basically the 4 E's that it's being talked about in the RBI vision document. So if we double click on each of these 5 areas on the right hand side, if we can just go to the next slide, please. Yeah, the next slide. So when we talk about cross-border payments, I already spoke about this in the internationalization point. So what we are trying to do, and NPCI set up a new entity called as NIPL, which is almost now 2.5, 3 years old, where the key objective of NIPL is that it should promote the products or the payment system that is being developed locally in India by talking to different countries and governments and improving the interoperability of these payment systems, including UPI, IMPS, RuPay card scheme, and some of the other payment systems that we have developed locally in India. So there should be a global outreach of RTGS, NEFT, UPI, and RuPay. These are the 4 key products. And from a settlement perspective, what is being contemplated is that we can, as a country, open international accounts for settlement with the RBI, where it can be in INR or in the a host currency, which could be USD or Euro or whichever currency it is. And from a interoperability perspective, I think there has to be some changes in the technical formats, because currently the RTGS and some of the other systems, may not necessarily be on ISO 20022. So the financial messages should be able to easily translated into the common platform, which is ISO 20022, being used globally, and that needs to be, revamped. FIs, which is financial institutions, would also have to refine the payment messaging routing if the currency transactions and settlements can be made within India. So this is the first point on cross-border payments. The second point, and very important, is two-factor authentication. So India was one of the first countries in 2000, maybe 8 or 9 or 9 or 10, which I remember, where two-factor authentication was being talked about, and then it got introduced with the setting up of the RuPay card scheme, and we mandated two-factor authentication for online transactions in 2011-12, I think. And with that, the other countries globally also followed suit, where we had two-factor authentication being followed by some of the other international countries. However, for an Indian consumer or a citizen to use his card or her card sitting in India for purchasing something on a foreign website or a website which is out of India may not necessarily require a two-factor authentication today. So the goal or the vision is that can we have a two-factor authentication for cross-border transactions, where if I want to book a hotel, say in Europe or in Middle East or in Singapore, then it necessarily asks me for a second factor authentication, and hence the possibility of fraud using my credit card or my any other card or wallet is minimized. So I think that is the whole vision that RBI wants to kind of look at when it talks about the two-factor authentication for cross-border transactions. The other important point which is being covered in the vision is that we are used to a OTP kind of message for a two-factor authentication. Lot of times in India, we have seen that there can be some, fraud or some interceptions that can happen, and the OTP can be taken away from you. So are there other technologies or ways in which you can make the two-factor authentication much more reliable, much more stronger? OTP definitely is one way, but there could be other ways that can be explored from a technology perspective. So I think that is what is being discussed, and there are already some experiments and talks that are happening on this front. The third point that is there in the cross-border payments that I would like to highlight is introduction of CBDC. Lot has been already spoken about this in India in the last 1 year since the budget time. So central bank digital currency is basically a form of virtual money, which is backed and issued by the central bank in lieu of paper currency and coins. And what it essentially does is that it can have entire traceability of how the fund is being used. So if I am paying money to X person, and the X person then pays it further to a Y person for any transaction or service, and the entire tracing of that digital currency or digital money can be done. A lot of countries globally are already thinking on these lines, and India is one of those countries that have, are doing some proof of concept and in the process of coming out with use cases for CBDC. So we hope that the e-rupee, as we call it, or the digital rupee, whatever is the nomenclature, will be introduced shortly in the next few months. And RBI has spoken about both a wholesale digital currency as well as a retail digital currency that may be issued. What it means is that for the users like you and me, I will have a digital bank account where I will be able to store my digital currency, and that will be easily interoperable between my traditional bank account where I have money which I can withdraw for currency or coins, and it will be interoperable with a digital currency account that I will open going forward. So CBDC as a use case is also very important for cross-border payments, because if I am, allowing payments happening from India to outside or from outside to India in the international inward remittances, then that can be done through CBDC. It can be almost instant. It can be near real time, and it can, happen at a very, very fast pace, almost replacing the current system that we have today. So this was the third point in cross-border payments that we spoke about, or RBI has spoken about in the vision document. If you can please go to the next slide. So the second area that is being talked about in the vision document, which I thought is important to discuss, is on domestic payments and transaction processing. Now, when we say domestic payments and transaction processing, there are a host of initiatives within the vision document that has been discussed. And we need to understand what each of it means and what is the impact of that on banks like ourselves, right? So I think that is more important. So the first is explore local processing of payment transactions. So if we are all aware that RBI had mandated, data localization, where, the storage of data, payment data, card data, etc., in India would be necessarily stored in India, right? The processing by these card networks or card schemes, which could be Visa, MasterCard, or any such scheme, could still be outside India. So what is happening today as we speak is that if a Visa or a MasterCard transaction needs authentication, then the transaction can potentially go outside India to a server or a system in, say, in Singapore or any other nearby location. And it comes back with the message of yes, no, the transaction is successful, approved. And the storage of the transaction details necessarily has to happen in India with the new RBI norms. What now the vision document is saying is that the transaction data also should not go outside India for processing. Even the processing of the transaction should happen in India. So what that means is that some of these international or foreign companies will have to set up their payment systems, servers, etc. in India for processing of the transaction. And anyways, the storage of those transactions is necessarily already there in India on a local domestic soil. So I think this is what it largely means, and this is what could be the implication of this on these kind of players. Obviously, the charges we'll need to see how they will need to be revisited, because if the foreign companies have to set up their transaction systems in India, then the investment costs and all can be massive in that sense. So that was the first point around local processing of payment transactions. The second point is processing of online merchant payments using internet or mobile. So what today happens is that for all the merchants, online as well as physical, there are payment aggregators and payment gateways that act as a middleman and process the transactions for these merchants. And also, they are offering different services to the merchants, lower cost, value-added services, etc. from that perspective. So what the vision document says is that can we set up a parallel system to a payment aggregator or payment gateway where merchants can come and hook onto that system. It can be a centralized system, and that can offer all the kind of payment instruments like card, net banking, wallet, etc. And the payment can be done seamlessly with a high uptime and low cost. So I think that is what they are trying to say, that processing of online merchant payments using internet or mobile banking, but through a centralized parallel system that needs to be created. The third key point around domestic payments and transaction processing is what I spoke about earlier, where all the RBI operated systems, some of them are not on ISO 20022. So how can we push for all the messaging platforms, including the RTGS, NEFT, UPI, etc., to the same standard, so that the interoperability is there, and also when we go international, then we don't need to use translators for changing or the message formats from receiving the payment transactions. So from a bank perspective, what it means is that if this comes into force going forward, then as banks we will have to upgrade or update our some of these payment systems to ISO 20022. And also, if we don't upgrade or update, then we should be open to using the message translators which exist, which can translate the message from ISO 20022 to the format that you use currently, and vice versa. So that's the third point on ISO 20022. And the fourth point was on expand the interoperability to contactless transit card payments in offline mode. So what happened earlier, and NPCI and the entire government introduced the NCMC card, which was a step in the right direction for all transit related requirements. It's basically a prepaid card where I can load funds, and so it's an offline transaction because some of these funds lie on the chip of the card that exists. So it's like a purse that is created on the chip, and I can just tap and go at a metro location, and then the fare is calculated at the time I exit, and that's how the money gets deducted. But it's an offline transaction, it's not an online transaction. So this is being done now for each transit system. So we had the first one was in Kochi, then we have in Ahmedabad, Surat, we have in Bangalore, we have in Noida, and so on and so forth, Nashik. So many cities have their own transit systems, which could either be a metro, which could be a bus, or a multimodal kind of transport, like Kochi even has waterways for that matter. So the cards that were being issued by the banks, which were called the issuer banks for these locations or these transit systems, were restricted to one city. So they used to issue a transit card for the city, which was a prepaid card, which could be used largely for the city of Kochi for transit, as well as any other open loop transactions, like using at a merchant location or buying any groceries, so on and so forth across, because it had also the network logo, which could be RuPay or Visa or MasterCard. Now what is being talked about in the vision document is, can the same card which is issued in Kochi be also used in any other transit system across the country, making it truly interoperable, right? So can I issue a card in Kochi to a citizen, and when that citizen travels to Bangalore, he can use that same card which has already funds in that card at a Bangalore bus or a Bangalore train, or any other kind of transit system across India. And that will unleash the true power of having funds in that NCMC card, and then using it across transit systems across India in an offline mode. An offline mode, as I mentioned earlier, is basically storing of a wallet or a small purse on the chip of that card, plastic, and debiting the money from there. So I think that is what it actually talks about. So if this happens, then as banks we will have to ensure interoperability from an acquiring perspective, if we are the acquirers for these transit systems across any of the city. And for offline transactions also, we will have to ensure that it's blacklist management, recon, settlement, all of this is properly handled, which is very, very important for a transit system. So this was the fourth point on domestic payments and transaction processing. If we can please move to the next slide, which is the the second area. So if we continue this, it is also called a national card switch for card transactions at point of sale and settlements. So what is happening is that if you look at how the ATM switch, which was again by IBO only, I think it was being operated, I think 10-12 years back. And then when NPCI was formed, this ATM switch got moved to NPCI, and this ATM switch essentially processes all payment card transactions for cash withdrawals across the country and for other non-financial transactions also. So be it a RuPay, be it Visa, be it MasterCard, be it any other card, all of these transactions, 95 or 97% of this largely gets routed through the ATM switch, which now NPCI operates, which was earlier being managed by IBA, which was done by IBA. So it is talking about a similar central switch where for all card transactions, which is for the acquiring transactions, I can route all card transactions through the same through a separate switch, which will be a common switch, irrespective of it being Visa or MasterCard or RuPay or any other card scheme, right? So currently what happens, currently if it's a Visa card and if I use it at a point of sale terminal, then the acquiring bank will send it to Visa as a card scheme. Visa as a card scheme will then route it to the issuer, whoever the issuing bank. Issuing bank will then authenticate, and then the message will flow back through Visa back to the acquiring within seconds, and the POS terminal will give a success or a failure kind of message. That is being proposed to be replaced by a national card switch, where a central switch, we don't know who will operate it, whether it will be RBI or NPCI or whether some other entity will operate it, where all kinds of card transactions, be it Visa, MasterCard, and RuPay, or any other card, will be routed through that switch and be authenticated, and transaction will be processed. So I think this is the fifth point that is being discussed in the vision document, specifically for domestic payments and transaction processing. The other point was on the need for multiple payment identifiers. So if there is any common identifier such as the LEI, how can that be used for different systems or different transactions, and also to capture additional information that may be required. And also, if this is implemented, then from a bank perspective, we may need to update or upgrade our technology to accommodate this new change. The seventh point on this was all the government payments, government receipts that happen. How can they directly happen with the RBI's eKuber platform, right, which is the core banking system of RBI? So this is a good thought, but for actually implementing this, there'll be a lot of efforts that need to be done. So all the central government, state governments will have to integrate the payment systems directly with the RBI's eKuber. Then what will be the role of banks, right, to ensure that the settlements are happening? All of those will need to be worked out and understood much more in detail. This is still at a high level, but it is a good thought in the right direction. So these were some of the points on domestic payments and transaction processing. If we can please move to the next slide. Then we come to the third area, which is payment policies and guidelines. So these are all policies, guidelines, which will be relooked at going forward as per the vision document. And if required changes, updates, new guidelines need to be created. The first point is on the PPI guidelines. We have been focusing a lot on PPIs in the last over 10 years. There have been updates, changes, etc. to the PPI guidelines. What is now being said is that for PPI guidelines, can we also look at bringing in the closed loop PPI systems or wallets that are currently not under the purview of the PPI guidelines? The current PPI guidelines just talk about the semi-closed PPI instruments and the open loop PPI instruments, which anyways the banks need to report to the RBI on a regular basis. But if there's a closed PPI, I'll give an example. Starbucks today in India, they have a closed PPI wallet or a closed PPI card. It is not a semi-closed PPI. So what it means that I can load funds into that PPI card or wallet, and I can use it only at that merchant location, which is issuing that particular PPI wallet. So those kind of PPI systems, which are called closed PPI systems, RBI is proposing to bring under their regulatory ambit as part of the larger PPI guidelines. So that is something which is envisaged, not yet done, but we hope it will be done going forward. So when we can keep a tab and RBI can have a view on those funds. Because what happens as a customer, if I load fund and if that merchant shuts down, then where do I go as a recourse? Where do I recover my fund? So those is currently not covered, but RBI proposes that even that can be covered or be brought under that ambit of PPI guidelines. And there are some other things on the PPI ambit, which talks about implementing a formal customer grievance redressal framework, to handle better customer complaints and defining the turnaround time for complaint resolution. The second point on the payment policies was on BNPL. So as we all know that buy now pay later is a new phenomena, or not very new, but yeah, it's been there since a few years now. And the introduction of digital lending guidelines I think a month back or a month and a half back in India, where RBI has come out with a detailed implementation plan for digital lending guidelines, where it talks about the role of a regulated entity, which is banks and NBFCs, and it also talks about the role of the loan service provider, which is the LSP, and the third party as part of this, and how those demarcations need to be done. So who can store the data? What has the customer need to do? If the OTP needs to be sent to the customer, how can the cross-selling happen? So all of those nuances are in detail defined in the digital lending implementation guidelines that the RBI has recently come out with. And I think this point was also talking up similarly about BNPL, which is a subset of the digital lending guidelines in some sense. So the requirements around KYC, fraud management, governance, all this is now largely the responsibility of the regulated entity, which could either be a bank or an NBFC, which has to be registered with RBI. So this is covered already. The second point. The third point is evaluation of charges for all payment systems. So we may be aware that RBI again has recently already come out with a circular where it talks about it's a discussion document, where it talks about revisiting the charges of fees of payment systems and instruments in India. So what it talks about some of the transactions that we had made zero fees. For example, the RuPay card, debit card, as well as the UPI transactions. Can there be some form of cost recovery be brought back for those systems, especially since the transactions are increasing a lot, especially on UPI, and banks like yourselves and payment operators need to invest a lot of funds and money in the core banking system and the UPI switch to process the transactions. So that was the thought process behind which that discussion paper for reviewing the fees and charges for payment system has come about. The second point that it talks about is that some of the other payment systems like prepaid cards, which has a high MDR of 1.5%, 2%, right? Should that be so high akin to a credit card, or should it be lower like a debit card? Right? Because like debit card, we all know the MDR for Visa, MasterCard is, depending on the transaction slab, it could be 0.4% or 0.6% or 1%, depending on that, right? So that is again a point of question that has been raised in that. So I think it's a step in the right direction, because if we review the charges for all payment system, make some less, make some more, I think it will neutralize the overall impact. And what has to happen last 3-4 years with the zero MDR or zero charges, acceleration has happened. I think for the sustainability of our industry, payments industry and financial services industry, some form of charges can be looked at and brought back, is what I feel. So I think it's already come out, and hopefully all of you may have responded back to the discussion paper, which was open for comments. And hopefully we will get a final document by RBI after they consult with all of you and with IBA and NPCI and few other entities. The fourth point on payment policies and guidelines is the Payment Infrastructure Development Fund. So as we all know that the PIDF fund was developed a few years back with a corpus of 350-400 crores, which was the initial contribution by some of these card schemes like Visa, MasterCard, RuPay, as well as by the issuer banks to proliferate the acceptance infrastructure in India, especially in the locations from tier 3 to tier 6 onwards, and to the northeastern states where the acceptance touch points are very, very minimal or very less. So that was the overall kind of requirement at that point of time. So what it proposes is, one, it will review the overall success of the PIDF, whether the PIDF fund has really been beneficial, successful, whether through the increase in the acceptance touch points, transactions have increased. That is the first step it will do. Second step, if it is a success, and we hope it is, it will probably allocate more funds to the PIDF fund, and it will be beneficial because a lot of acquirers, including banks, including other entities, will have a better incentive to go in those areas which are unexplored and kind of improve or increase the acceptance infrastructure and touch points in these locations. So I think this is what it proposes, and we'll see how this will move forward going in the future. If we just go to the next slide. There are two more points in this payment policy and guidelines. So what RBI proposes part of the vision document is constituting a payment advisory council. So we already know that the DPSS, which is the department or the Department for Payment Settlement Systems within RBI, has a board which takes the key decisions on payments. What it is also saying is that there'll be a formal payments advisory council, which will constitute people from the industry, from banks, from card schemes, from fintechs, and also any legal people or any other experts that may be there, some professors, etc., that can be there as part of this payment advisory council. So this council will provide strategic guidance, additional oversight to the board, and help them to take the right decisions, especially on new topics that are emerging which are not fully explored. The last point was active engagement and involvement in international community. So as I already mentioned earlier, NPCI is one such entity which is set up NIPL. RBI through other entities, including banks like yourself, can explore how we can actively participate internationally in G20 or any other platforms that are available, and help in some common causes like countering the money laundering, countering financing of terrorism, multi-country Cbdc. This will be an important and interesting point, because if all countries have their own CbdCs, and if they are on the same platform, a distributed ledger technology platform, then how that can be integrated and brought together is going to be very, very interesting. So I think this engagement involvement will continue, and cooperation will be sought from different countries. Please go to the next slide. This is another area where RBI clearly talks in the vision document of bringing non-bank entities or players within the regulatory ambit. What it is saying, essentially it is saying that the entities like big techs, fintechs, payment operators, which were traditionally not there as part of the regulatory ambit, how they can be brought inside. So if we all look at payment aggregators, right, which was a recent development, where online payment aggregators like BillDesk, PayU, MobiKwik, so many other, right? They had to apply to the RBI to get a license to continue the business of payment aggregation and getting merchants on board, just to check their governance, to check the KYC, how they do of the merchant. There are some prohibited merchants, so they should not onboard them and process their transactions. How they do the settlement, how they do the fund management for customers, dispute management, grievance resolution. All this is very, very important for the RBI. So I think that was the key reason. Now what it is saying is, going forward, online PAs is already done. Now we will also look at other entities like offline PAs, which are physical payment aggregators. The likes of, a few entities are there, like Paytm is there, Bharat Pay is there, so many entities that already do this. So how can they also be brought into the regulatory space and comply with licensing and capital requirements? And this is a framework that has not yet come, but hopefully it should come in a few months or maybe end of this year or early next year from the RBI perspective. And the offline PAs will then have to apply for the regulation and license. And attempt the regulation of big techs and fintechs. So big techs, as we all know, have a lot of data. They have a lot of customer base. The likes of Amazon, WhatsApp, Facebook, have Apple. They have a lot of customer information and data. Some of them have already got a license for PPI or other payment aggregator license. But how can, at an overall level, how can we regulate and monitor what these big techs and fintechs are doing, especially with respect to KYC, customer data management, funds management, settlement, etc., etc. So I think this is going to be very interesting, and there could potentially be also a license which could be called like a big tech license for these entities to operate in the financial services space going forward, in addition to the licenses that they already have. So this could be one more possibility for bringing non-bank entities in the regulatory ambit. So this was the fourth area. If we can please go to the next one, the last area. So the last area is on security boost and fraud mitigation. I think what is happening is that RBI has been from the start very, very cautious of how to boost confidence among the citizens to use digital payments. So a lot of measures have been done. I spoke about two-factor authentication, which was India was one of the first country to introduce almost 10, 12 years back. And now what we are seeing is that there are different measures that, like, cybersecurity is one of the key focus areas for all banks like yourselves and payment systems and payment operators. Even at a central level, RBI and NPCI both, they raise a real time or a near real time kind of alert to the issuing bank before the transaction is being processed. So I think that is a very, very good step that we are doing. And India is again one of the leading countries in security and fraud prevention and fraud mitigation. In fact, if you look globally, the percentage of frauds in India is one of the lowest across all the countries in the world. Right. So taking that step forward, I think there are few initiatives which RBI wants to cover as part of the payments vision document. The first is weaving in alternative authentication mechanisms for digital payments. So what it is saying is that we have a traditional risk-based authentication mechanisms, but can we also look at additional, alternative, authentication mechanisms, like, location history, biometrics, digital tokens, in-app notifications, etc., to potentially replace the additional factor authentication or to make the overall process more stringent and more kind of secure. And in a way, this has already been done by some of the fintechs and other players and banks, but this can be formally done and a process and a regulation can be set forward. The second is there is an online dispute resolution mechanism that is developed, and the whole idea is that for all kind of digital payment instruments, how can customers use the online dispute resolution system for fraud monitoring or for reporting, which will give a real-time view to the customer. Like if I have a credit card today, and if I want to report a dispute, then I call the bank and I say this is a dispute, but can I track where my complaint is, or how many more days it will take? Maybe no. So if we look at the online dispute resolution, if I lodge my complaint as a customer of my credit card dispute in that system, then that portal will be able to tell me exactly where my query is, where my complaint is, and how many more days resolution it will take. Right? So I think that is one example, but there are many such examples that the ODR can potentially facilitate. So this is again a good step, where an online dispute resolution will help to report fraudulent transactions, as well as if there is a fraud merchant, then we can put it over there. All the other banks also can be prevented from giving a funding or giving any kind of financial instrument or product or acquiring that fraudulent merchant. Right. So it is both working on the customer side as well as on the merchant side. Yeah, so I think these were some of the kind of key focus areas that I thought were important for the vision document, which I have attempted to cover in the 5 buckets, and within the 5 buckets, we've talked about each area within that. Yeah, I think this was more or less it from my side. If we have any questions, we can happy to answer it now. We have 15 minutes, or we can, take it
Thank
offline.
you. Yeah, thank you, Mr. Mihir Gandhi. Thank you very much. Not few questions. We have plenty of questions actually, and I don't think 15 minutes will be enough for that.
Sure.
Very interesting. You have given us 360-degree view of this issue. So we have some questions on the chat. Are you able to see that, or should we read it
Yeah.
for you?
1 second, I'll just see it. No, I don't have all the chats actually, all the questions. If someone can just tell me the questions, then I can start.
Okay.
I don't have the question.
So meanwhile, we arranged to send it to you. Can I request you to, I got first question from my side itself. You spoke about CBDC also.
Yeah.
So you think it will impact deposits of the bank? And will it be significant? Is it an issue to be looked at?
Sure. So as I mentioned, CBDC, there are two types of CBDC. One is a wholesale CBDC and second is a retail CBDC. Within retail CBDC, there are two different models. One is, and I'll explain those models. So when I speak about wholesale CBDC, it essentially means the fund flow between the RBI and the banks and how the settlement happens between the RBI and the banks for the intraday liquidity and for maintaining specific reserves with the Reserve Bank of India. So that is the wholesale part of it. The second part is of the retail part of it, where retail CBDC can happen through two options. One is the central bank, in this case RBI, can directly open a CBDC account for each individual citizen, bypassing the bank. That is one option. The second option is through the bank. I go and the way it is traditionally happening, where I open through the bank a CBDC account for a customer or a citizen like you and me. Now, most likely, most of the central banks globally are adopting the second option, where they are going through the banks, because banks have been the financial intermediaries for the entire country from many years back. So to answer your question, what will happen is that I, as a citizen or a customer, will have two bank accounts. One is my normal bank account, second is my CBDC bank account. The CBDC bank account will also have some funds. The normal bank account will also have fund where I can withdraw cash and do different. So that's the basic difference between a CBDC and a normal bank account. I can do interoperability of funds between my CBDC account to the normal bank account and vice versa. But to answer your question, I don't think there will be an impact on the deposits or deposit policies of the banks, because if it is going through them, then again the funds are kept with them, be it in a digital way or in a physical way. And even then, taking one step forward, the lending that will happen or can happen going forward can also be in a CBDC way. So that also could be a possibility going forward, that I accept the deposits to CBDC, but also the lending which will happen for a short-term loan or for my working capital loans for SMEs, businesses, etc., can also happen through CBDC. So those are some of the possibilities that CBDC opens up, but we have to see how India will go. We don't know what direction RBI will take.
So basically, banks will be looking for traceability feature, which will be enabled in CBDC. That will be benefit.
Absolutely.
But the deposit portfolio wise, you don't feel there will be much impact.
Correct.
That will be there.
Correct. We just have to see what does the impact on the SLR, CRR, and if banks are required to maintain the same levels, or for the CBDC deposits, it can be lower. So all those questions are there. Hopefully, RBI will provide some visibility or clarity on those areas.
Mr. Mihir, there are some questions. If you are not able to see that,
yes,
can we read it for you? Or
I can see them. Yeah, I can see them.
Okay.
So first one is share a copy of the presentation. I think, we can share that. With which all countries integration plan is in place for international payments. So I think NIPL is talking to almost 30-40 countries as we speak today. And few of the countries, they have already signed a understanding or agreement, or memorandum of agreement with Singapore, with some of the Middle East countries like UAE and Saudi Arabia, and few of the other Southeast Asian countries already signed. The other country that is speaking is in Africa, in Europe, and also in America, right? So the integration will take place, is in process, but first you have to do the memorandum of understanding, and then after that you do the integration, the technology integration, where if we are as UPI, if we have to do an integration of a faster payments, which is UPI, then our UPI system is not an ISO 20022, so there has to be a converter that has to be created by NPCI from a technical perspective, where their system can read our messages and our system can read their messages, and the transaction can go through seamlessly in a real-time manner. So that's what is the next step. So the first step is memorandum of understanding or agreement. Then second step is the entire blueprint or the technical integration, and third step is the go live, or the where banks will also come into board, and they will also have to accept the payments in their bank accounts. So I think that is the process. I think it is still will take some time. We need to wait and see how it will go. The next question, I think, which has been asked is, please elaborate on cross-border payments. So cross-border payments, I think we spoke about, where in both inward as well as international as outward cross-border payments, there are different things that are happening. So The first thing is currently the way we receive it is through Swift, largely, right? There are two options now which we can think about beyond Swift. The first option is a distributed ledger technology, where the like of CBDC can be used, where I can transfer funds from a CBDC of, say, US to a CBDC of India, right? Which is happening on the DLT platform. So it is transparent, it is near real time or real time. The currency is fixed. So if I'm transferring at one USD 75 rupees or 78 rupees, whatever that current, it is fixed. So there is no fluctuation in the exchange rate and there is no additional fees or markup for this customer. That's the first option. The second option is through our existing payment rails that we already have, like UPI is there, RTGS is there, NEFT is there. So if we tie up, which was my earlier point, with some of these countries, then can a direct integration happen to our payment rails and the transaction can be processed again in a seamless or a near real time, hence bypassing the traditional Swift framework that exists. So these are two ways of bypassing the Swift framework that we have been seeing. And that is what the RBI's vision is. And maybe if it comes true, then all of us as banks and stakeholders will have to work towards it to integrate these platforms. The next question is about LEI. Is it only for corporates or for retail customers? I think it can be for both, but the way it is currently structured is largely for corporates. It can also be for retail customers, but we will have to see, based on how it further advances and, progresses. The next is on, can you please share the video? Yes, okay. Presentation will be shared with all the banks. Yeah. Will RBI apply some charges on UPI transactions, whereas customers paying even small amounts also through UPI? Will it not impact on less cashing? You're right. So when I say that charges will come in for UPI, and that is a proposal by RBI, it will definitely exclude some of the smaller transactions, smaller amounts, and it will also exclude the small merchants having turnover less than 20 lakhs, right, in a year. So if these two things are taken care, then our aim of bringing the underbanked or non-banked segment of the population in the digital payments ambit will not be impacted. So that can still happen. However, those two things have to be taken care. One is small merchants should be excluded, and second is small transactions below a certain value should be excluded from UPI charges. So that is what I believe. But let's see how the discussion goes, and what the RBI and the other stakeholders like yourselves, will have to say on that. The other question is LRS scheme and FEMA guidelines, how online digital transaction can be made real time and monitored for is any plan relaxing the LRS guidelines? You're right. I think this is again hand in hand with what we are seeing. So as I mentioned earlier, the DLT technology or platform, right, where the entire traceability of the transaction from where it is coming in to where it is going, what is the beneficiary, and then from where. So I think that if we make it very transparent through different technologies like distributed ledger technology, blockchain is one example, but we can use different technologies, then that will benefit. From a policy perspective, is there any plan on relaxing LRS FEMA? I really don't know. We will have to check and come back to you. But I think DLT could be one such platform or an opportunity which will help to try increase the traceability and transparency. Yeah, I think we've spoken this. CBDC be fungible with the prevalent physical currency. We already spoken on this. The next one is, does payment processing entail localization of only the core payment processor or components like e-banking surveillance? Honestly, it should be of all, but we will have to wait and see how the guidelines come in and how it is. Definitely the core payment processor where the payments processing is happening, we will have to have it in India in addition to the storage. E-banking, surveillance, fraud management, all this, we will take a call depending on how the guidelines shape up. But as I mentioned earlier, it is a huge cost and a huge investment. And some of these foreign companies were not in compliance to it since very recently, and then they finally got compliant and have been allowed to issue more cards in the market. The next is, what is the compliance proposition the CBD offers when we already have digital money in our accounts and we can use it through several means? This is a great question. I think whenever I speak about this, people are already saying, I already have money, I already have UPI, I already have wallets. What is the point of CBDC or account, right? So I think the key thing is I would say 2 or 3 things where CBDC can be used better than our traditional ways of using money. First is for international payment transactions. So if e-dollar is being sent from US to India, and if we have a e-rupee or a digital rupee, then I can quickly get that conversion immediately. I can get the funds in my bank account if it is a CBDC to CBDC, because the technology and the platforms are the same. So that's the first use case, or the first kind of area where I see a CBDC having an edge over a normal digital money, or SWIFT channels, or whatever we call it. Second use case I would see is on the programmable payments. Now, when I say programmable payment, it is basically if I as a customer want to give or as a government want to give a subsidy to my customers or citizens, right? Can a CBDC be used to give only a benefit to that particular customer, and that customer can use it only for a programmed use, which is for availing a benefit of a fertilizer or a grains, or a subsidy of books or whatever it is. So I think that is the second use case. And the third important feature of CBDC is it improves the traceability, governance, transparency, which currently digital money may not have, because I can withdraw it, I can use it in cash, I can send it to 10 different accounts, and then from there it can go to many multiple accounts. So these are the 2 or 3 areas where I feel CBDC has an edge over digital money. But otherwise, you're right. I mean, India is already one of the leading digital payment countries in the world. We already have good payment rails, so we can continue using it going forward. But I think the interoperability between normal bank account and CBDC account is very important, because I don't want to be stuck having only CBDC money or digital money. Whether NIPL is a for-profit entity? Yeah, it is a for-profit entity. Yeah, so I mean, I don't know why it is a for-profit and why NPCIs are not for-profit, but yeah, I mean, I'm sure there might be reasons. We can ask NPCI actually. Is this the next question is? Can you tell us test cases which RBI is carrying out? I mentioned about some of the retail and wholesale. Maybe RBI is doing something. I am not privy to that, but this is what I understand from my discussions and also my global research, what happens in other countries. You mentioned about big techs coming under regulatory ambit of payment. With the introduction of ONDC, how these big techs would be impacted? Yeah, so for payments, I think big techs could potentially come in, as what I said. They already have some licenses under the RBI, which is your prepaid semi-closed license, which Amazon and other entities have. ONDC is a separate platform which is not directly regulated by RBI. It's an optional thing where big techs can come in to act either on the merchant side or the customer side and offer their platforms or customer base or merchant base to, and this is more for e-commerce or digital commerce transactions or physical commerce transactions. So it is slightly different. Maybe RBI may not having the full ONDC view in that aspect. Discussion paper on charges indicate linkage between MDR on credit cards with the interest rate. Can you please have understanding of MDR interest rate in a credit card scenario? So I think I don't think a direct linkage can be established. MDR on credit card is there, but what it says is the MDR on credit card is valid because of 2 reasons. One is, as a bank, I need interchange. Interchange is used or required for me to bear the credit risk of giving a credit line to that customer in case the customer defaults, and for that 40-day or 50-day credit period, 0 interest credit period that I give as a bank, right? So that's the first one. Second is interest rates can change and it can be more competitive, but I'm not sure whether a direct MDR linkage can be established between interest, because what is happening is a lot of new age banks, like IDFC First Bank and few other banks, they are coming out with very competitive interest rates based on the transaction patterns and the customer profile. Now, if you tell me that at IDFC First Bank, if my interest rate is only 1% compared to industry of 2% or 2.5%, then does that mean that the MDR for IDFC Bank or interchange for IDFC Bank cards reduces? Maybe no, answer is no. So we'll have to see how this plays out and whether this can actually be done. The linkage can actually be done. There's a point on fintechs getting regulated in terms of payment system. Doesn't include any license opening. It will be through different programs. So one is obviously PPI is already happening. So they're already fintechs have already been licensed. Second is the BBPS. If they are into the BBPS activity, they need to get a OU license. Third is they are a payment aggregator online PA. They need to get an online PA license, which is now under process. And going forward, it could be a offline PA or any other cross currency kind of license or any other new license that RBI comes in. Then we can potentially look at that. Will RBI allow foreign entities to hold INR in local account without having local entity? Not foreign entities. I think the point was more on foreign governments having those kind of accounts to ensure cross-border, quicker cross-border linkages. Fintechs are doing it for receiving remittance from wherein funds are credited to local accounts. Yeah, I think this probably needs to be relooked. This is not very. It's in a gray zone, I would say. It's not. I don't know if it's clearly allowed or not. So we'll have to see this how it kind of goes. Use cases. I think CBDC we spoke about. How do we control the influx of wallets which are growing? Each aggregator issues their own wallets. Wallet are supposed to be interoperable. The point is that wallets are supposed to be interoperable. It's a mandate in the latest PPI circular, but the fact of the matter today is that none of the issuer fintechs want to make their wallets interoperable because they want the money to be within their core ecosystem. So I think this is something which RBI or entities like yourself will have to push forward and make it truly interoperable in that sense. UPI is first of its kind. Any possibility of being adopted? So this is anyways being done. Like in Singapore and Thailand, I spoke about they have a tripartite where the PayWave and PayNow, which are the Singapore and Thailand systems, along with UPI, will be integrated going forward, and even a QR code can be scanned and payment can be done at any of these locations. How will the common citizen benefit? We spoke about this, I think. It is a challenge. We'll have to see how. Is there a vision to curb use of paper-based? Yes, there is a vision to curb paper-based transactions. So if you look at the volume of paper-based transactions in the last year, it was 0.88%. Going forward, we expect that it will be 0.25% as per the Vision 2025 document. That is one of the 5 goalposts that has been identified to reduce the usage of paper-based instrument, including check. 0.25% of the volume of total transactions, payment transactions. Today it is 0.88%. So I think that's the direction where we want to go. So I think I've covered most of the questions in time.
Yeah, you have covered most of the questions, but still we have many questions with us. But given the time constraints, we'll not hold you for long. Dear participants, this entire webinar is also being put on our YouTube channel. So if you want to view it later, you can have that benefit that is available. And as far as presentation is concerned, we'll be sharing with all the member banks. That benefit will be there with them. So with this, many thanks to Mihir Gandhi ji for sparing time with us and giving us insight, which is really very useful for the entire banking industry. You have thrown light on various aspects, and the payment vision which RBI has come out now actually is, I will say, going to be more relevant for all the bankers. So with this education which we got from you, with the knowledge we got from you today, will help us in understanding the vision of RBI for payment systems. Thank you very much for all your valuable contributions to us. On behalf of Indian Banks Association and all our members, I thank you once again. Thank you very much, Mr.
Thank you, sir, for the opportunity. And it was good talking to all of you. Thank you so much.
And thanks to all the participants also for joining us today. Thank you very much. With this, we come to the conclusion. Thank you. Thank you very much.